Welcome, this is Jesper Söderqvist. I am the CEO of Boule, and we're here to present our quarterly results for the fourth quarter and the full year 2020. I'm here in Spånga at the Boule headquarters together with our CFO, Kristina Rubenhag. Before we start the presentations, a few practical matters regarding questions. You can submit them in the chat function, and you can add them during the presentation, and we will respond to them at the end of the presentation. So please send your questions and then we will show them and respond to them after this presentation. So 2020 has clearly been a very challenging year. Near patient diagnostics has been impacted by COVID-19. The demand has really not been there. Also, instrument sales has been difficult in spite of new digital method. But before we dive into the results, I want you to do a little recap of Boule. So Boule, we provide blood diagnostic for the near patient segments. We have a strong hematology background. We have a large active installed base of about 29,000 instruments. A normal year, more than 130 million tests are done in the 100 countries where we are represented. So even if 2020 was a challenging year in terms of sales and profitability, we have used the time to improve and prepare ourselves for the future. And in the fourth quarter, we passed a very important milestone for Boule. For our new product platform development. During the past years, we have strengthened our organization, particularly in R&D, product development, QRA, and operations. Thanks to that, we have made significant progress during the year. And very importantly, we passed this milestone, where we have now defined a clear path forward for our first release on the new platform. A 5-part instrument, a very advanced, that will broaden our portfolio. We have made design choices, and we also made some technology choices where we will use our proprietary laser technology instead of the technology we acquired in 2018. With this new 5-part instrument, we'll get a more broader and more attractive portfolio. We will address a larger market, which have a higher growth than our current market. Over time, we will also release other new instruments on this platform. If you look on our business, you can clearly see that we have been severely impacted by COVID. Instrument sales has recovered after the dip we had in the second quarter. But we see also that the testing went down, and then our consumable sales also went down. So once the market open up again, we will see that both instrument sales and consumable sales will recover. We do have an inactive installed base of around 29,000 instruments. With around 3,000 instruments that we sold this year, what it really means is that our installed base is flat year over year, where we have been used to a growth. So even if it's been a bad year, I think we still have a very good position to get back to growth and profitability once the demand return. So, when we presented our third quarter, I think there was some, optimism in the market, and we had very positive signals. That demand and optimism, went down as the second or third wave of the pandemic hit many countries. If you now compare our fourth quarter compared to 2019, which was a record year and a record quarter, our sales are down about 23% in constant currency. Our gross margin dropped by 2.3 percentage point, and that's mainly driven by the low utilization in our manufacturing. As I said, we took some design choices in our platform development, which meant that the technology that we acquired in 2019 became also obsolete, and we instead chosen the proprietary technology. That's a major step forward, but it also triggered a write-down of that asset of 40 million, which we take as OPEX in the fourth quarter. Hence, we have a very poor operating margin, even though that's a non-cash effect. If you look at our operating cash flow, we generated 24 million in the fourth quarter. And then we did investments in the new platform of around 11 million during the fourth quarter. Here you can see, how sales, how COVID-19 and the pandemic hit our sales. So basically, we see that there are slow sales in all product areas, both the instruments, because it's very difficult to get out to the hospitals, and the healthcare really have other priorities. But we also see a lower consumption of reagents due to the lower testing done. As I said, there was an upturn in the third quarter, but that optimism declined. And actually, in the fourth quarter, we land 6% lower on sales compared to the previous quarter in 2020. We basically see that all markets are impacted. So, and as you know, this is really a global pandemic. So what does this do to our profitability? So if this is an EBIT graph, bridge for this quarter versus fourth quarter 2019. The main effect on the EBIT is, of course, the lower sales. And of course, what you see as we take this write-down of the acquired technology as OPEX, that also hits the OPEX line with 40 million. But if you look at the adjusted EBIT margin for the fourth quarter, it's minus 1.6, with which corresponds to an EBIT margin of minus 1.7%. This is, of course, below our standards, and we don't reach our full potential. But it's been a very difficult quarter in many aspects and related to the pandemic. So if you zoom out a little bit and look back on all of 2020, I think, despite, the pandemic, we have instead focused on things that we could impact, and we have made good progress with many of our strategic initiatives. Prior to 2020, Boule has seen a positive growth trend during many years, and that trend was now broken. We think that this is only a bump in the road, but with 3 quarters that heavily impacted by COVID-19, it really has a big effect on our sales. Net sales in constant currency is down about 18%. But I must say that I'm really proud and very pleased with the progress we made, with our strategic initiatives, not only related to the important progress we made in the platform development, but we have also worked with, improvements related to our operations. We have strengthened, our QARA organization. We are preparing ourselves for the new European regulatory framework, IVD. And we are establishing local production in Russia, which we plan to start up at the end of the first quarter this year. If you look at our results, we have these non-recurring items. We did a write-down of the associated company Biosurfits in the second quarter, and we did the write-down of the technology that I discussed earlier in the fourth quarter. So net sales for the full year, 400 million versus the 499 we had last year. Gross margin, 44.2%. That's slightly below last year. Our operating cash flow for the full year is 75 million, and the adjusted EBIT margin for the year is 8.5%. The board proposed a dividend of 0.55 SEK per share to be decided at the general meeting in May. So looking at the profitability for the full year and compare that to 2019, with the write-downs, we had an EBIT of 5.9 million. If you exclude the write-downs, the adjusted EBIT is 34 million, which I said corresponds to an adjusted EBIT margin of 8.5%, which I really show the strength and the resilience we have in our business model. The lower profitability is mainly related to the lower sales. In terms of gross margin, we're down 1.1 percentage point, and that's mainly driven by low utilization in our manufacturing. We have done savings in admin and sales and marketing. We've done less travel, we haven't participated in trade shows, etc., due to the pandemic, and we have replaced that with a number of digital initiatives. So overall, it's been a very difficult, very tough year, but we really have used the time to really prove internally and prepare ourselves and invest for the future. So I must say I'm satisfied and with the achievements that our partners, our distributors have managed in this difficult time, and also to the staff in Boule that have worked through this very difficult time. If you look at our financial position, we talked about the cash flow. The operating cash flow was 24 million in the last quarter and 75 million for the first full year. We have done large investments in a new product platform, but also done other investments. Our finances also includes a payroll protection loan of 11 million, and that recognizes revenue in the third quarter. Overall, our available liquidity has increased by 5 million this year. So going into 2021, I think we have a fairly good position going forward. So I guess everyone is eager to see how 2021 will play out. If you look at the priorities, and clearly, some things we can control and some things we can't control. If you look at the market recovery, the recovery will really be driven by declining spread of the virus and eased restriction in our markets. Clearly, we think there's a continued uncertainty during the first half of this year. But let's see how much the vaccine will kind of slow down the spread and how quickly markets will open up. I think the challenge that we've seen during this past year and also see right now is really related to transport and logistics. And there is lack of capacity and pricing has gone down and lead time has gone up, etc. We haven't seen that much of problems with the supplies of components, but what we hear from other industries is that there is a potential risk for component supplies. However, even if the fourth quarter was really, really tough, we see some positive signs of recovery now in January. So let's hope that it's that's how it will continue. So if looking at what we are doing in Boule now to make sure that we quickly and with full force get back to our customers and start sell again and drive up profitability. We will drive a lot of digital marketing initiatives. We will make sure that we will enhance our support to the distributors, so make sure that the instruments that has been turned off during the pandemic, when physician office lab, etc., have closed, that they really get up in operation quickly. Of course, we look very much forward to start local production of reagents in the first quarter. We also announced a OEM agreement in August, and the production to that customer will ramp up here during the first half of this year. And then, of course, very importantly, we're now in the phase that regarding our new product platform, we will industrialize that product during 2021.